Hello and welcome back. Let's welcome in the management at Shipping Corporation of India. HK Joshi, CMD, is with us. Thanks so much for taking out time for us, and telling us, what do you make about the Q1? Can you talk to us about, the profits that you have delivered in Q1, or how was the Q1 quarter? What essentially this means, and more importantly, after Q1, how are things looking in MAM?
Well, in the Q1, the company has made a phenomenal profit, which is a jump of 178% over the previous quarter. The net profit for this quarter stands at 317 crores as compared to the previous quarter of 114 crores. And if you compare it with the corresponding quarter of the previous year, then of course there was a loss of 39 crores. So you can see the astounding performance of the company in this quarter. This quarter's performance is not likely to be sustained over the future quarters, primarily because the latent impact of the pandemic is already being felt by the company. And this is very clearly visible in the dip of the top line, even in the current quarter. In the current quarter, there is already a dip of 13% in the top line, which stands at 1,143 crores as compared to the previous quarter of 1,314 crores. So the top line dipping is clearly an indication of the impact of the pandemic, and this is likely to further increase in the quarters going forward.
Right. In terms of volumes, what is the sort of pickups you're seeing, the inquiry, the demand? Can you just talk about the trend? Is it at pre-COVID levels? Are all the sectors seeing this sort of demand, or mainly it's shifting towards, select countries, select sectors where, essentials are very important?
The entire shipping segment is primarily into four segments. And the tankers segment by far is the largest segment as far as Shipping Corporation of India is concerned. The upsurge that we've seen in the last two quarters was primarily because of the upsurge in the tanker freight rates, which was because of the demand in the floating storage. Going forward, that's already flattened out. So the future outlook with respect to the tanker does not appear to be as optimistic as it was in the last two quarters. With respect to the bulk, which is the second largest segment of the company, the bulk has started picking up in terms of numbers. As you see that the BDI, which stood at 624 as on 1st of April, has almost tripled, and on the close of the quarter, it stood at 1800. So despite that upsurge, this BDI is still far below the pre-COVID numbers. If you compare them with the 2018 numbers, they are still not of the same magnitude and the same levels that we would like to see them. Now, this is primarily because most economies have been shut down during the pandemic, and the impact is seen in all economies as well as in the manufacturing. Now, with the economies being shut down, manufacturing was also impacted. And with the manufacturing in China picking up, we've seen movement of coal and iron ore from both Brazil as well as from Australia moving into China. And that is what has helped in these BDI numbers improving. However, with the reference to the Indian context, we don't see much movement in the coastal trade with respect to coal as of now. But of course, once the manufacturing activity goes up to the pre-COVID levels, the shipping numbers would also, because we are a derived demand. On the offshore segment, there is a substantial negative outlook because the crude prices are not the way they should be. And considering the implications of the crude prices on the viability of the offshore projects, the consequent impact on the offshore segment in shipping is also very clearly visible. The most impacted segment in shipping is the container and the liner business, and that is primarily because currently the focus is totally on the movement of essentials commodities and essential services. Most of the container trade, which would relate to garments and luxury items, as well as you see the all other activities have taken a backstage, and the container is very badly hit. On the bulk, I also want to add that the manufacturing of the automobile sector has also substantially impacted the demand of steel and consequently the demand of iron ore in the bulk segment.
Mrs. Joshi, hi, this is Mubina as well joining in, and yes, we do know that there has been increased shipments of iron ore, from Australia, from Brazil, especially to China, right, where imports have surged. In fact, they are at a record high. That's what the latest July reading as well mentioned. I want to speak to you about VLCC and tanker ships because, in April we had that phenomena where there was literally no more place to, store oil. So what is, what are the VLCC rates like? If I'm not mistaken, you have roughly about 5 VLCC tankers. So just want to understand what the scenario is over there. Are rates still high? Is storage still full on offshore oil front?
Mudina, the floating storage is currently full, but see, everybody wants to lap up the opportunity which is available in business. And currently the OMCs are now trying to liquidate those inventories which they have built up in the floating storage, because of which we've seen a substantial slump in the VLCC rates as well as all the other tanker rates as well. They have completely flattened down. In fact, the numbers now look more or less similar to the 2018 and the 2019 numbers. So the complete volatility, complete upsurge in the tanker freight rates has completely flattened out as of now. And since the OMCs are now liquidating their inventories in the floating storage, because see, it's a clear cost that the inventory carrying cost will be adding to the cost of the OMCs. So now for them, it makes business sense to try and liquidate those low cost inventories they have built up. And that is leading to release of tankers back into the market, and that would further impact the freight rates going forward. So in July to September, we are not very optimistic on the tanker freight rates. I think they completely flat. We don't see any optimism on the tanker side.
Okay. So, Mrs. Joshi, what, if you could just, sort of summarize what the distribution of the fleet is for SCI currently, and, any particular regions or markets that are looking interesting?
As far as the fleet of Shipping Corporation is concerned, we've got 32 tankers. As you very rightly said, we've got both product tankers as well as dirty crude tankers, as well as we've got 1 gas carrier, we've got 5 VLCCs. So that aggregates to about 32 tankers, which constitutes about 54% of the entire SCI fleet in terms of numbers. But in terms of deadweight, the tanker constitutes about 80%, 78% of the complete DWT of the SCI fleet. We've got 15 bulk carriers after that, and we've got 2 liner vessels, container vessels, and we've got 10 offshore vessels. Considering the entire mix, we are a completely diversified shipping company, as you are aware. So on the tanker segment, I've already given you an outlook. Looks not too good going forward. At least for the July to September quarter, it's going to be very damp. We expect, we being optimistic, that in the winter months, October to December, there should be a certain improvement, and maybe in the fourth quarter we see. But as of the second quarter, I don't think tanker is going to be good. Bulk, we have reduced our losses in the first quarter. the bulk segment had a loss of about 28 crores in the previous quarter, which came down to 22 crores. So we still are on a loss. We hope that in the next quarter, we should be at least able to break even, if not get into a positive mode. On the offshore segment and on the container segment, the outlook remains negative. There's at least in the next 2 quarters, we don't see anything looking up in both these segments.